We do have a question in here, Hans, with your directional plays. What do you do in the midst of a bullish market? You look at cover calls, and it's the same thing for put selling. There's a positive edge to out of the money put selling in general because you have that nice steep skew. Occasionally, I'll put out a tweet like this, knowing that it's going to sort of touch a nerve. And I said, this is not free money, because some people say, well, cover calls is like renting out your house. No, it isn't, because when you rent out your house, you are not limiting the upside value to your house. Your house can continue to appreciate. It is a very, very different situation. That caused problems. I said, listen, it's not that I don't like them. I will do them, but you have to be very strategic about them. It has to be worthwhile. So this is a market where things are just very, very strong. And the option selling side of things, especially the call side, has been challenging. Selling the upside calls generally is a very, very thin edge to negative edge trade, just statistically backed by that. And I know anecdotally, I've said it on here before, one of the best pro trades is buying upside when you're in the midst of a very calm to up market. It's just cheap. Now we're getting to that point where we are seeing vols pick up. 7 weeks ago, I said they're too cheap. Long-term vols are too cheap. They've gone up. I said upside call skews too cheap. Boom. It's absolutely soared. So now we're at a place where I don't think it's exuberant what I'm seeing in volatility markets, but it is not the easy pickings that were there, say, 5 weeks ago or 4 weeks ago. So now we're starting to play a little bit more call spreads. You have to use that skew to your advantage. You're not just buying some out of the money calls because they're expensive. And if for some reason the market just kind of goes quiet for a couple of months, who knows? Or we find a top or some news comes out and it's a reason for the market to kind of come down and sit around for a bit, you're going to get vegaed, which means you're going to have the fact that you bought those expensive options, they're going to come down. So that's why you want to pay attention to your volatility charts and kind of get a feel for what's the sort of texture of the volatility market. Am I paying a lot? Am I paying less? And what's the skew like? So at this point, you can continue to play upside, but it's going to be in things like call spreads. It's going to be in broken wing butterflies or maybe just butterflies. It could be in not so much calendars because you're going to have that vega risk. So there are different things that you do in different places, which is what I get into in my courses and programs that Samantha was talking about. You want to be that well-rounded trader so that you're not like, oh, wow, I was right on this move, but I didn't make anything, or I lost money, or this isn't what I thought would happen. So it's a different market now than it was 5 weeks ago, and people have definitely bulled up. In the options market, we are seeing things change. If I look at, there's a wonderful spot gamma scanner that they put out where you see all the stocks are over to the right side, which means upside calls have gotten expensive versus those downside puts. This becomes a little bit better of a cover call environment, of a caller environment, and things like that sort of come into play a little bit more.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.